One of the cornerstones of your employee benefits package is Section 125 or the cafeteria plan, which is what a lot of people call it. Let's talk about what it is and why it's important. In short, what the cafeteria plan is, it is the documentation that every employer is required to have to be able to pre-tax employee benefits. Now, one of the important things is, what are the qualified benefits that you can have that can be pre-taxed? Well, there's kind of two categories that they fall into. The first one is, what benefits should be pre-taxed? Those are going to be, of course, always medical, dental, vision, and then ancillary products such as accident plans, hospitalization plans, and oftentimes critical illness plans. Now, the plans that should never be pre-taxed are going to be both short and long-term disability and life insurance. A good way to remember this that I tell a lot of clients is, think about the things that are your most desperate times. If you're out of work and you're using your disability or following the death, those are the times that you need the most money. The government's going to get money either out of the premium or out of the benefit. So let's make sure that we're doing it after tax so that you receive all of the benefit you can during a time of disability or when there's a life insurance claim. Now, let's talk about the tax advantages real quickly for the employees. Now, one of the things is that when you're pre-taxing your benefits, that is going to decrease your taxable income. And when you decrease your taxable income, that's going to save you on income tax, but it's also going to save FICA and Medicare as well. So basically, for every $100, it's going to save you $7.65. Not only is it beneficial for employees, but it's also beneficial for employers as well. When you pre-tax your benefits and it lowers your taxable income, it also lowers the taxable income that the employer has to pay. And so that FICA savings, that $7.65 we talked about earlier, not only does the employee save that, but the employer saves that as well as on federal unemployment taxes as well. Now, one of the other big things, and this is the fifth thing I want to talk about, is discrimination testing. It's really important to have discrimination testing. And basically, what they're wanting to make sure of is that there's not a certain group within the employer that is getting too much benefit out of it. The places you need to pay attention to are key employees, shareholders, also highly compensated employees. A good rule of thumb on this, and you should always do your discrimination testing, but the smaller the company, the more likelihood that there should be some discrimination going on. When you have large companies and a lot of people are enrolled, the likelihood of discrimination is really low. There's a test we run with all our clients, and if you'd like that, we'll run one with you too. All right, let's talk real quickly about what happens once you make your selections during either the open enrollment or the annual enrollment, whichever one you want to call it. When you have pre-tax benefits and the employee chooses, they don't have to, but they choose to pre-tax their benefits, they are locked into that selection for a year, unless there's a qualifying life event. And this is where we get so many questions. So let's talk about what those are. An employee getting married, an employee getting divorced, birth of a child, death of somebody in the family that is part of the family. Maybe it could be a spouse, it could be an employee, it could be a child. And then also if the employee decides to adopt a child. A couple other places that we run into some questions is loss of coverage. So that could be a spouse that loses their coverage at their employee for either termination or they're going to another job. But it could also be a child that's losing coverage as well. Oftentimes, those are employees that lose eligibility for CHIPS or they lose eligibility for Medicaid. The last one is if your spouse is going through open enrollment, it's a brand new ball game because you can make any changes when your spouse is also going through open enrollment as well. And a lot of people would get a little confused on that. Okay, what is going on during an open enrollment or an annual enrollment? Now, that is when the employees can basically make any changes they want to. They can add coverage, they can terminate coverage, they can add people onto their plan, they can take people off of their plan. This is something that's really important to do every single year because things change. Somebody may get divorced, somebody may get married, they may have a child. Who knows what that is? And it is always super important that the employer allocates time for the employees to come in and visit with an agent or make phone calls to an agent, whatever it is, to make sure that they totally understand what they're doing and what they're making for this next year. I always tell my employers, all you have to do is to deliver a life insurance policy to the ex-wife to make it a priority that you talk to every employee every single year. I've had to do it, and it's not all that fun. I hope that I've answered some of your questions about cafeteria plans in Section 125. If you need to talk about it or you have some other questions that maybe I didn't answer, give us a call. And our website is foundationbenefits.com. You can reach out to us there. I hope I've helped, and let us know if we can help anywhere else. Thanks a lot. See you next time.